go. Okay. So yes, so the first thing that I want you to understand, if you are going to be a gold trader, I want you to understand that this pair number one, it's a safe haven asset, and it's actually respond to what the market is doing. And also the other thing that you must understand that it also correlates with USD Japanese yen. So if you can understand what the movement of gold, you can also understand the movement of USD Japanese yen. Okay, so like I said, we're going to look at gold today. So we're just gonna start by looking from the monthly time frame. So the reason why I go to the monthly time frame, we need to see and check what the market has been doing to get the correct trend. So it's a matter of getting the right trend in the market. So as you can see, in 1961, it was flat, and then it started rising in 1972. So with this move, we just calculate from this point. So we consider from this point where we can actually be able to see some real movement. Okay, so we're going to start here. So this movement going up there, that is an impulse. So remember, I've been talking about the impulse, and those who have been following me now, I believe maybe you might understand some of my strategy. I mean, like how it works, part of it. Okay, so we got an impulse until to that level there. Okay, so like I said to you, once you get an impulse, and then you get a correction, and then the correction, it also gives you what? It also gives you the wave two. So this correction, I'm just gonna draw a line, then change color to yellow. So if you can check even on my YouTube, I think this is the third time that I'm analyzing this pair. I've been analyzing this pair for the rest of my life. Okay, but anyway, for the sake of you guys, I'm going to repeat again. And that point. So we can observe. So why did I take this point? So the reason why I took this part, I wanted to show you that this is what we call a correction. So the market corrected in this manner. It did 1, 2, 3, 4, 5 to give you this leg, right? Okay. So this movement on its own, I call it in W movement, and then 1, 2, 3 in X movement. And then it also gives you 1, 2, 3, 4, 5, another movement to give you a Y movement. So this becomes a WXY. So we've got our X, and then we've got our W, X, and then we've got our Y. So let's use yellow since we are on the bigger time frame. Okay, don't mind about these messages. So in that, you can also check the levels. They are actually corrected in the zone of 78.6% here. So that zone, I call it a dip zone. This is a dip zone for the market. So, okay, anyway, someone will ask like, okay, so what happens here? So we're gonna also label it inside. So this one, let me just name it an ABC. 1, 1, 2, 3, 4, 5. So what does it mean? It means that this leg of W, it was formed with what? With sort of like a triangle. You can see a formation and A, B, C, D, E movement to give us that W. Okay. All right, great. So that's how we got this movement. And then on the same movement, we got it as well. Like from that point, we said 1, 2, 3, 4, then 5. We got it here again. To give us this Y. So in giving us that Y, then the market now, we can now proudly say this is the beginning of our wave. It give us 1, and then that's our 2. So we're expecting 3, 4, 5 going up there. So the other secret that I told you, it's easy for you now with my customized Fibonacci 2 to easily get your wave 3 target. Like I said, this is target 1, 2, 3. So you can see that from this movement to there, and then the market extended there. So this becomes automatically what? Automatically my 3, because was an extension. And then in my 3, so this level now, that will in future. So let's just use the yeah, for the trend lines I like to use. This is where our 4 is going to begin. So our 5 is going to be up there. We'll see for how far is our 5, but let's rather put it somewhere so that we can see. So now we've got 3, 4, right? But also, I want you to bear in mind, 4, it doesn't just come. There are principles to follow. So the principle, we say from that point to that point, my wave 4, it has to be in the zone of 38.2% or 50%. So when it comes to 50%, like I say, in the 50%, it's the neutral zone. So this acts sometimes as wave 4, and also sometimes it takes as what? As wave 2. So in this case, it's acting as wave 4. And then the other thing that you have to notice with this principle, it says that wave 4, it must not temper around with the high of wave 1. So in this case, this is the high of wave 1. Sorry. So wave 4 must not temper around with this level. The sooner it tempers around and breaks below this level, that's what we call an invalid trade. So as you can see in this case, it didn't come in that zone. So which is what? Which is correct. Okay, there's someone who raised their hand. So what I could prefer to do, Willan, I would like you to just write on the chat box, and then I'll answer you if you have a question, please. So can you see that? So this becomes valid, this level. So, and then this now becomes my 3. Okay, great. We also confirmed there. So this is what I'm seeing on a monthly basis. Remember, I haven't yet analyzed and I haven't yet given any direction or what. I'm still analyzing. So this is the monthly basis. That's what we see. So now we can confirm that we've got our 1. Remember, it's like this. We have our 1, WXY2, and then automatically we have this movement for 3 up there. So that's our 3 there. Okay, so now let's go to weekly. So we are here. So we got this 3 now. We are here on the weekly, and we got this level. Okay, there's a question. I missed the part where you start numbering those 1, 2. Okay, so if you miss anything, I believe you can actually get this on our YouTube channel. So we're going to post this on our YouTube channel, and we'll send the link even on my WhatsApp status or Telegram groups, so that you can go and watch again the what you call the session, or else I'll come back to you after we finish when I do the question and answer. But it's easy. I'll just run through the process later. So like I said, okay, let me just rather run it through. Like I said, Elo12, it's a strategy which works with principles. So there are principles and categories for each and every level. So when I say level, it's wave 1, 2, 3, 4, and 5. So there are principles which guides wave 1, there are principles which guides wave 2 for you to confirm. There are principles also which guides wave 3 and 4 as 5 as well. Okay, so but we'll talk about them. We'll come back to that and talk about them. So and then so remember now we are doing wave 4. So in our wave 4 also we have to understand that we can either get what? A triangle, we can either get a zigzag, we can either get what do you call a flat. All these they happen in wave 4. Mainly in wave 2 there are what we call the combinations, but we don't get a triangle in wave 2. So combinations, it's either it can be a flat and a zigzag, or it can be a zigzag only, and all those things. So that's what we call a combination. But in wave 4 we can get everything. So in this case, as you can see, there was an impulse down. So let me try to so that we can see you guys. So you can see from there, from here, there was an impulse down, and then there was a structure of correction there. Can you see this corrective structure? Okay, so now we can use the broken line because it's inside. Here's a corrective structure from that point. So I believe you guys, you know how to draw trend line. We spoke about how to draw trend lines. So trend lines is the first 2 points. First 2 points. All right, like that. Okay. So we've got that corrective structure, and also we've got another one going down there. Can you see it? I'm going to explain about these two structures. We have another one down there. So someone will ask why in the asked that here. Remember, like I said, this is the first high and then the correction after this movement of this. Then this was the first 10, and then now we take it from there. That's how we draw trend lines. And then also we touch it from that point going down there. Okay. So we are going to explain about this, but overall it gives us this, like we said, this point, that's where wave 4 it is. This is, so now this becomes a zone. So our zone, we're going to take it from that level. So this is the zone that we're considering for what, for our wave 4. Okay. So in this case, what happened to this duplicate of 3? Okay. Do this again. So we have got one correction, impulse correction. And can you see now in this correction, remember last time I told you about divergence from that point to that point. So if you want to confirm divergence, use the line graph. So from that point to that point, it's going down. But from this point on my RSI, it's going up. So this becomes a divergence. It shows momentum that the market is about to turn around. That's why we can say that the market turned around. Okay. That's how the market ended up turning around. Okay. So in this case, so we can actually say that, okay, this movement, someone can come and say 1, 2, 3, 4, this can be 4, and then it ended up with your 5. And then the 5, it was an ending diagonal. Well, you might be right, but in this case, remember this 1, 2, 3, 4, 5, it is in a form of what? Of a correction. So in this case, we're gonna name it A, B, C, D, E. So we've got this. So we've got the X movement, and then we've got the A there, then we've got our B, and then we've got our C, and then we've got our D, and then we've got our E there. Okay. Okay, let me just try to do this right. So someone will say, why did you this leg? Remember, this is the D leg. So the D leg was from the A, B, C to give you D. Remember, in a correction, we've got 3 waves, which is A, B, C, D, A, B, C, sorry. So this is your A, B, C movement to give you this D leg. And then this is your A. So in this case, we've got your A, B, C to give you this leg, right? For your B leg. So that's what happened here in this correction. Okay, so in this case, this can be a complete wave 4. Why? Because we actually measured before, remember? And then we saw that it came in the zone, of which it's confirming. But also now what guides us through is that the next movement, was it impulsive leg or it's a correction? That's what is going to guide us through if it's going to be wave 5. Because if the market gives you a corrective manner, and then in this case, then this becomes another leg for wave 4. But this is a potential now. So how do we see that is a potential now? That's what we're going to check now. So we're just going to try to zoom in so that it can be clear. So as you can see that after this market broke this structure, A, B, C, 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 this one. So this becomes your structure 1, 2, 3, 4, 5 to give you this, like, remember it's a diagonal. And then from there was a breakout. There was 1, 2, 3, 4, 5 as well here. So there was a breakout and then a retest. So want to measure this retest if it can lie in the zone of wave 2, right? Okay, so now remember, now we are now constructing wave 5. So remember, wave 5 is an impulsive wave, and also it consists of what? It consists of 5 waves inside it. So as you can see, also the same structure, the market came in the zone of the 78.6%. So in this scenario, this is what we call similarity in the market. So the market is giving us similarity. Okay. So, and then now we can get that this is X, then we've got an ABC movement again. So in that, and then now we cross check, like where is our wave 3? You can see that our wave 3 was actually extended to that part. Okay, so there was an extension as well, which is good. So now we observe that we have got also the same scenario that we saw from the bigger time frame, which is the WXY. But this one, let's put it in white because you're now inside. Something like that. Okay, and also in this, remember we're constructing this 5. So in this scenario, now we also have got, we have confirmed that this market is actually giving us a 1, a 2, and then we are gonna have a 3, 4, 5. And then let's put it in white as well. So we've got this one here, and then we've got this 2, and then this becomes automatically our 3. Okay, so now we're gonna do 4 and 5 for us to get this 5. Okay, so let's remove this. So this is where we are right now. Okay, so we can see that the market formed this structure. Okay, and then from there to there. Okay, so that's our WXY. So we've got our 1 there, and then we've got our 2 there. Okay, and automatically we have our 3. This becomes our 3. So can you see that this is happening? It's a similarity. What's happening on a smaller time frame is what happened on the bigger time frame. So that's the other key thing that you must actually keep in mind. So the same question that we asked ourselves previously on this level, when we got this level, is the same thing that we're going to ask ourselves here, like, is it wave 4? So we're going to measure again. So like I said, bear in mind, the market is forming what we call what? Similarities. So like that, okay. So, right, as you saw, remember here, they came in the 50% zone, and then currently they are in the 50% zone. So we must also keep it in mind. So in that manner, now we draw a zone. We have a zone now, a zone that we keep in mind that, okay, this is the zone that we're gonna keep in mind. So in this case, we're going to take the lower candlesticks, the lower touches on average, touch, exactly. So this is the zone that we're keeping in mind, that we're expecting maybe the market, they must turn around like on this point. So this is the zone for this 4 now. Okay, guys, this is a beautiful strategy. If you can master these principles, it makes life more easier. It makes life more easier. So now we've got these 3, and then now we've got the zone for 4. So we're gonna construct 5 or 5. So okay, so but now the market is in the zone, which is beautiful. And then let's go to daily now. Okay. Okay, still wanna shrink it so that we can. Now we're talking about this part. So can you see now in this scenario that this is a correction? This, because why is it a correction? It's fluctuating. It's not respecting. So an impulsive wave, it respects its highs and lows, and then a correction, it fluctuates, meaning to say it doesn't respect its highs and lows. It just fluctuates. So in this leg, it becomes my A leg. So it's A, B, C, A, B, C, and then this leg also, we're gonna talk about this leg. So we've got a three so far because we've got 1, 2, 3, and then 1, 2, 3. This is a 3 leg, yeah? Okay, great. We just observe that. So let's label it so that we know what type of operation are we expecting. So we've got A. Okay, let me rather do this so that, so we've got this A, then we've got this B, then we've got this C, right? Come here. Okay, so something like that. And then we've got the same thing here. We've got this A, we've got this B, and then we've got this C here. Okay, great. Something like this, right? Okay, and then in that, it gives us what? It gives us A, and then sorry. Yeah, it gives you A, and then it will give you B, and then this C is coming. Okay, so we've got this structure. So for my A, I had A, B, C to give me this A, B, C to give me this B, and then we're gonna now check what's happening for this C leg, of which is still what? Under construction. Okay, and we have what? The zone to speculate. Awesome, which is beautiful. So this is what we got now. So from our three, it's constructed in that way. We've got A, B. So we're expecting this C leg. And then now, what we're gonna keep in mind now, we have now this becomes a zone of consideration. This becomes a zone. This is a zone of what? Of wave 4. This be okay. Let's take it from that area. Right. So this becomes a zone. So the market is ranging, you know what, in a zone of wave 4. So remember, in wave 4, we said that it can either be A, B, C, D, E, then up, or it can be A, B, C, up. So, so this becomes our first swing target here, up there, after we consider this area. Okay, I hope we're together. So now we want to talk about this part now. Awesome. There we go. That's great. So what happened here? Where did we take it from? Let's take it from here. Okay, it's fine. Yeah, but at the end of the day, this is our target. Yeah? So remember, this is your C leg, then this is your B leg. So bear in mind, remember, we got what? We got a 3-3 wave. We got 1, 2, 3 to give us A. Then we got 1, 2, 3 to give us B. And also, if you have to check inside, they are inside waves. This 1, 2, 3 gives you A. Then this 1, 2, 3 gives you B. Then it's C. So it's something like that, the inside wave. So we've got a 3-3. So in this case now, this kind of 3-3 wave, to me, there's only one type of a correction which can give you, because we've got 3 types of correction. We have a 5-3-5, which is a zigzag. And then we have a 3-3-3. This one is going to be a triangle, which is 3x5. And then we have a 3-3-5, which becomes one, which becomes a flat. So in this scenario, this to me it makes sense more as a 3-3-5. So this 5, it can also be in an impulsive manner. So we can have 1, 2, and then now we measure. So let's see how was it done. So we're going to measure and see everything, that how possible is this. Okay, so you can see that this comes in a 50%, and then this becomes my target. So in this scenario, I have 1, 2, 3, and then this becomes my 4. Do you get it? This is what now the market is doing. So we're now constructing this 50 leg. So 1, 2, 3, 4, and then this is the 50 leg. Okay, so this is what the market is doing now. So we come again and then we're like, okay, this is my X leg. And then we've got 1 and then 2, and then this becomes my 3, and then this becomes my 4. So, but let's change, and then I want my 5 in this area again for this C. But let's change the color. Let's use red. Since, yeah, since the ABC is red. So 1, then we have 2, and then automatically we have 3. So why did I take here? Because this is the level, the target. So it's a little bit extended to that area. So if you are trading this, your take profit was going to be here. Your take profit was going to be here. So this was the Wara thing. And then this is your 4. Okay. Great. So something like this. Do you get it? So now I've got 1, 2, 3, 4, and then now we're doing the 5. The 5, which is this one. Okay. So this is what we saw on the daily. Now let's go on H4. I hope you guys are with me here. You're not getting lost. So I have my 3, that point, and then I have my 4 there. Okay. So now what am I doing? I'm constructing 505. So what do I have here? I have 1, 2, 3, 4, right? So again, I'll check from there to there. Can you see that? So which means my 3 was extended. Okay. So in this case, I have 1, 2, 3, 4, and then what am I constructing? 5. You see? So, but in this case now, you have to also to check like what is really happening. What is the market showing you? So this becomes your A, B, then this is the last kick of what, of a dying horse. This is the last kick of a dying horse now. So what are we expecting? We're expecting the market, in this case, to drop a bit into this area, or what we're going to do is we're going to wait for this close of today, and then from next week we take it from there. So this is why the reason that the market continued to drop. This is the reason why the market continues. So how are you going to trade this, Mr. Nestlin? So basically, like I always say, let the trend be your friend. So breakout of this, any breakout of this, you consider it buying. So this is what you're going to consider. And also remember, you are in the zone. So this is your zone. So anything can happen from this level, but breakout of this, it's going to give you a very good buy. So this is what we're expecting. So we are closer to buy rather than to sell, according to my analysis. So I'm going to end here on H4. If there are any questions, so now I'm going to open the question and answer session. Any questions, any contributions? Let's start now. We are left with 10 minutes. Okay, there's a question coming. Will the market make a retest before a drop? So like what we said, now this is what we're going to expect. Like it's either it's going to drop a little bit further or break out of this level of it. This is where to buy, because it will also break out these my trend lines. They are what I call the moving average. They act also as trend lines. So that's why you see the market, it always come there and then bounce, come bounce, because the trend was still what? Was still strong for wave 4, constructing this wave 5. So it was a correction and impulse. So I feel like they are done, or they might be almost done. Like you can go to H1 if you want. You can also get it from H1. So yeah, from H1 it will be more easier, because on H1 now, your first entry, it will be when they close above this area, this, and then above also this one, these trend lines. Because you have to speculate. If they fail, then it's gonna drop one more. But if they close above, then it's gonna rise. So you can take it either on H1 or on H4. If it's a swing, take it on H4. Then if it's a scalp, you can either take it on H1. So this is our landing spot. So I hope you guys, you enjoyed the session. So, any more questions? Any more questions? Anyway, above all, thank you very much for joining. For those who have got questions or those who want to understand further, you can actually hit me up on WhatsApp and then we'll discuss further. But otherwise, thank you very much and I wish you the best in trading and have a lovely weekend. Goodbye.